Hello guys, welcome to another weekly breakdown video. Today I'll be breaking down the third week of March, as you can see, starting from March 17, 2025. And right now the price, I already know what happened in the market at this point because I am so close to my front testing data also right now, right? So due to that, I literally know what's gonna happen, but obviously I'm trading according to what my knowledge is, right, on the daily time frame. So now, before starting the weekly breakdown, let me quickly show you the news. Monday there is core retail sales on 6 p.m, which is very unusual because usually Monday there is no news, and Tuesday there is no news. Wednesday there is federal funds rate, which is also equal to no news. Thursday there is FOMC climate count change GBP and also USD news, unemployment claims, and Friday there is no news. So it's a good week news wise. And yeah, this week I have learned one thing, that even if your bias is bullish, you can look for sales in your time window in London session if you get it. Meaning, even if your bias is bullish in the higher time frames on the daily time frame, the price maybe at the end of the day will be bullish. But if you get the Asian high sweep and then you get the entry model, the MAC model, then you can take it regardless. That I've learned through practice and backtesting. Bro, the things that I've learned while I was backtesting is exponential, bro. That's gonna help me so much in becoming profitable. That is, here we can clearly see this is the weekly supply, demand, fair value gap, market structure shift. You guys know. So the previous weekly candle is not clear. It is not looking like the last week. The volatility in the market was very low, as you can see. Last week the volatility was very low. So let's see what will be the bias or how will the next week look like. Will be interesting. So the weekly bias on GU was not clear, and also on DXY the bias was not clear. As I've written here, DXY not clear, GU not clear. So now let's start the weekly breakdown. So the weekly bias is not clear. Whenever the weekly bias is not clear, I tend to trade with the daily bias. You guys know by now, right? You guys know how I trade more than me, I believe, right? By now. I'm literally explaining every single thing. If you take notes, then you guys will learn my strategy. You guys will learn how I trade and how I make money from these markets. Here we can see on the daily time frame, the market is broken structure to the upside, higher highs, higher lows, higher highs. And yes, now the price has been a little bit low volatile, as you can see, and little bit the price action is choppy right now. And even if I go to the H4, the price is not that clear, as you can see. The price is choppy, but it's also looking like a bullish solidified range. The price is still looking bullish according to me, and the previous week high was disguised as break of structure right there because it has been swept very early on. So now on Monday I didn't trade it. I didn't trade in Monday because my weekly bias is not clear, very low volatility, and also on the daily time frame the volatility is very low. So waiting for Monday to close, according to me, will be the best option for me, because whenever the market, the weekly bias is not clear and the daily bias is not clear, you want to wait, bro. Whenever the weekly and the daily bias are not clear, you want to wait. Trust me, you want to wait. And waiting for Monday to close in those kind of scenarios most probably will give you the trades, will give you the bias for Tuesday, right? So whenever, if it is the chance to give you the bias for Tuesday, then why do you don't want to wait? I waited for Monday to close. I didn't trade in Monday. So and also on Monday I didn't got any opportunity, as I have backtested it and I have already watched it. So now going on Tuesday, my bias will be bullish, right? According to how this Monday candle closed, on Tuesday I'll be looking for buys now. Now waiting for Monday literally gave me the bias for Tuesday. That is what I love about this strategy, right? So I trade with the bias, with the daily bias, and literally Monday will close as a bearish candle on DXY and a bullish candle on GBP USD. So that is when I go to the 4-hourly time frame. On the 4-hourly time frame, this previous weekly high became break of structure right here, and on DXY, as you can see, on the 4-hourly, the previous weekly low was not swept, which is also SMT. And on Euro USD, I could have looked for a beautiful buy to target the previous week high, because even if the DXY has not swept the previous week low, it is equal to Euro USD not sweeping the previous weekly high. So now on DXY, on GBP USD, we can clearly see the break of structure happen to the upside, because the price was already trading between this bullish solidified range from this low to this high, higher low, higher high. So now it is broken structure to the upside. There is the H4 fair value gap. So on Tuesday I'll be looking for a buy, and if I am looking for a buy, I will look for some sort of demand zones, right? And also on Tuesday there was no news, as you can see, and I waited for the Asian range to close. Even if my bias is bullish or bearish, I wait for the Asian range to close, and according to how the Asian range closed, according to how the Asian range liquidity is there, and then I decide I am looking for buys or sells at my time window. I only trade my time window, which is this marked zones right here, and anything that is not in the time window I don't trade. So simple as that, right? I made my trading as simple as that, only trading at my time windows and not even watching the markets whenever it is not in my time window. So there was a beautiful demand zone here after sweeping the New York session. The previous New York session was used as liquidity right here. The Asian low liquidity was swept, and there was a beautiful demand zone right there on here. The London demand zone, I didn't mark the London demand zone because the London demand zone was very far away, and whenever the demand zones or supply zones are very far away, the price tends to not go there and make it. And if the higher time frame bias is clear enough and it's strong enough, it tends to make a move without going there. So here we can clearly see, if we are trading with the higher time frame bias and the point of interest got mitigated, the M15 demand zone got mitigated, the previous New York session liquidity got swept, Asian low liquidity got swept, and M5 there was no entry. As you can see, M5 doesn't give the best of entries. Even if the M5 doesn't give the entries, we can still take it on the M1. I can guarantee you for a fact on the M1 we could have got something like this, and then a change of character would have happened on the M1. Yes, it is a high risk, high reward. Trading on the M1, I will get a beautiful entry, like 5 pips entry, right? If I take on the M1, but the reward also will be very high. In this case, we can see I trust my strategy, I trust my instinct, I trust my intuition, right? So here I could have taken the trade on M1, and if your higher time frame bias is clear and your other confluences are met in the market, even if the M5 is not giving you the best of entries, you can take it on the M1. I have also learned this week itself on the live trading. On the M5 we didn't got an entry, but on the M1 we clearly got an entry, and that was a winner. So this trade would have literally passed me the first phase of my challenge account, or even the second phase. As you can see, I'm a high risk trader. I risked 2.5% in the first phase of the challenge. It would have literally passed me the first phase. So Tuesday was a winning trade. Look, now you get it, right? How waiting for Monday to close gave me the bias for Tuesday, and also on Tuesday I caught a beautiful trade, right? And also this week I have learned which days to trade and which days to not trade. This day was a good day to trade because there was a demand zone in New York session, but there will be some days where the London and New York will not do nothing, or it will be consolidating. So next day, where are you going to look for a trade from, right? So also you have to be very careful. I'll show what I'm trying to say, okay? So now going on Wednesday, let's see what the bias is. So according to how this Tuesday candle closed right here, and now on Wednesday I'm looking for buys again, because it doesn't make sense to look for sells when the market is closing like this, at least for me. And also on DXY, the Tuesday candle literally closes a bearish candle, which gave me more confluence to look for a buy on GBP USD on Wednesday. Also on Wednesday there was no news. There was federal funds rate later on the day. So now on the H4 we can clearly see the break of structure happen. The fair value gap literally got filled like 80%, as you can see right here, and there is a beautiful bullish move right there. And obviously if I'm looking for a buy on Wednesday, right? So Wednesday I'm looking for a buy, and yeah, if I'm looking for a buy, I will look for a buy from a demand zone. So this London session demand zone is not valid because it's already mitigated from this New York session, and I am looking for a buy from this New York session right here. I am looking for a buy from this zone made in New York session. And also whenever the move in this kind of scenarios where the zone is a bit far away, and then the London session went to the downside and the New York session demand zone is there, we tend to get New York session moves. I have seen it so many times happening in the markets, and even it happened this time. Here you can see the price, London session literally went to the downside. When the price after the London session went down, swept liquidity from the London session right here, and then went up again, and again went down, swept liquidity from the higher low that was caused after taking the London session. So much of liquidity got swept. Due to my knowledge in the markets, I know that so much of liquidity got swept here, so much of buyers got out here. Whenever the buyers are getting out, whenever someone is losing, that is when you want to enter. Trust me, in the markets, whenever someone is losing money, that is when you want to enter, because for you to win money, someone has to lose, right? So that's what the game is right here. So this trade was literally a break-even trade, to be honest. This was a New York session trade. I am backtesting the London session, so this trade I will not journal it, but obviously this was a trade. This was a valid trade, and maybe I would have taken it in the live market, so I thought of showing it to you guys. So yeah, that was the trade. And later on the day, it was also, there was news like federal funds rate, so it was also very tricky. So now going on Thursday, there was GBP claimant count change, and also on USD unemployment claims, right? So whenever there is both GBP and USD news on the same day, I tend to not trade, or I tend to at least lower my risk, bro. I am arguing whether I should trade or not. The days like that where both London and New York session news are there. But to be honest, I didn't trade it Thursday, so let me just quickly skip it, because I backtested it. I didn't find anything, so no use of showing it to you guys, because it's just a waste of time, because I've already seen it, right? Maybe it will be a loss for you, but no problem. Monday literally went up. Tuesday sweep liquidity from Monday's high, Wednesday sweep liquidity from Tuesday's high, and Thursday sweep liquidity from Wednesday's high, and then now a bearish. So now going on Friday, I will look for sells. I trade the daily bias, right? I've told a gazillion of times. So now, even if I was looking for buys the whole week, but according to how this Thursday candle close, I will look for a sell on Friday. It's also looking like a bearish weekly profiling. The Monday, Tuesday, Wednesday went up, and Thursday went down, and Friday literally it's making so much of sense to go down on GBP USD. On DXY, it was also aligning on DXY being bullish. According to how this candle closed, not one of the cleanest, as you can see. It also has a wick, which makes it a little bit low probability, but obviously I will watch out for that. So now I'll be looking for sales, right? Let me show you. This week, this was a very, very beautiful trade. Let me show you. And on the 4-hourly time frame, you can clearly see there was a beautiful change of character right here on the 4-hourly. And when the change of character happened, I tend to draw the Fibonacci retracement. Also, the retracement made sense to happen to this H4 fair value gap. There was a fair value gap on the H4 time frame, which made sense to fill up. And now going on Friday, I waited for the Asian range to close. Look, my bias was bearish. I was looking for sells from some sort of supply zone right around here. Which was also made in our session, New York session right here. And yeah, but newsflash, I was looking for a sell, but if the Asian range went up, that is when I will look for a sell. But the Asian range was literally went to the downside. This is when you should understand the markets, right? Here I've written, decide your trades according to your time window and according to the situation in the market. Your bias in the higher time frame may be bearish, but who knows, the price in your time window may be, for some hours, may be bullish and give you a bullish move. In this case, the Asian range literally went to the downside, as you can see, and it made so much of sense to look for a buy in this case. And also the setup, the entry model was so clean that I couldn't resist myself to take this trade. This trade was so clean, and I would take this trade any day in the markets. Even today, even as I speak today, 19th of June, as you can see, 19th of June, Thursday, today also I caught a counter bias trade. My bias was bearish, same thing, and I caught a buy today, and it worked to the T. If I show you, this was the trade. Watch it. This was a beautiful trade. My bias was bearish. I marked this supply zone to trade from, but the price never entered the supply zone. The Asian low liquidity got swept on, and on the M5, if I show you, on the M5 we got a beautiful entry right here. It was a M1 entry, to be honest, but it was a beautiful entry. Got a 1:3, we bounced, right? So that is why I'm saying the importance of knowing, of adapting. So according to how this Asian range closed, yeah, after a Asian range closure like this, me personally, I don't want to look for a sell, I believe, because even if I am looking for a sell, I would wait for a lower high to some sort of demand, some sort of supply, and then sell, right? So the price to go down first needs to go up. So in this case, it made so much of sense for the price to go up, fill up this fair value gap, and I also got a beautiful entry right here. So that is why this was a B setup, B plus setup, as you can see, because it was not with the higher time frame bias. The M5 time frame literally gave us a change of character, and I waited for the equilibrium. The equilibrium hit to the T, got a 7 pip stop loss, entered the trade, and the rest was history. As you can see, we got stopped out, man. This was a losing trade on GBP USD, not a losing trade. It was a 1:2 risk to reward. As you can see, it was a winning trade. I mean, it was a break-even trade. As you can see, if I targeted a 1:2, it would have been a winner. And in the live markets also, I'm going to take trades like this. Whenever the Asian range is bearish and my bias is bearish, Asian range went to the downside, it makes sense London to go up to sweep some liquidity from the Asian sellers, right? But whereas on Tuesday I got a beautiful trade right here. On Tuesday we got a beautiful trade somewhere around here, I believe. I got the entry here, and this was a 1:3 risk to reward, I remember. And yeah, it is just a proof that we can also take trades like this, and my prediction was correct, man. The price literally ended up going up. Why? To sweep liquidity from the sellers. So there was a H1 fair value gap right here, which got filled, and after filling up this fair value gap on the H1, the bias was continued, and the trend genuinely continued to the downside. Overall, the market did continue with the bias being bearish, but we caught a beautiful buy, which was not in our session, which was in our timing, and the setup appeared. I took the trade, and it was a break-even trade. So this was a very, very beautiful week. As you can see, Monday, Tuesday, Wednesday went up, Thursday, Friday went down. So it is a bearish weekly profiling, and I consider this week as a bearish candle. And yeah, the weekly callouts, quickly have a watch for it. And I will also, don't worry, I have also clicked the picture and uploaded it somewhere else, so you can also watch that. And yeah, see you on the next video.